Hey, welcome back to Everything Money. In this video, you will learn about Intel, the amazing company. We'll show you the financials and what you should be paying for this using our stock analyzer and our amazing Everything Money software. Paul owns this company, so we'll go over why he loves it and what he likes about its future. If you want to trade Intel at a quicker pace, we'll show all the charts and trends with Mo, and he'll show you how money can be made on Intel swings. I bring these questions about Intel, your questions you might have, to a couple guys that own and operate over $100 million in multiple businesses that are running awesome, real estate that's running flawlessly, and stock. So let's talk about Intel and where we're going from here. All right, welcome in, Paul and Mo. Welcome, boys.
Tell us again.
All right, guys, first off, follow us on Instagram, Everything Money Investing. It's our new absolutely blowing up Instagram account. And then also follow us personally, because we got rejected for the blue check marks. And after I got out of the hospital for my suicide attempt, then
yes,
we came
back. Paul. You own, speaking of, well, I'm not even going to go there, Paul, but you own Intel and it's been down of late. So are you also contemplating life decisions based on this stock? What do you think?
No. So here's what I want to show before I get into that. I've been a big proponent of Intel. I own Intel, in full disclosure. Do not copy me. We're trying to teach a process on this channel, but I will disclose ownership when I have it. But look at the stock over the last 20 years, guys. This company in 2000 was $80-some a share. They had 6.5 billion shares outstanding, and they did 28 billion in revenue and 7 billion in profit. If I told you back then in 2000 that the company would go from 28 billion to 78 billion in revenue, from 7 billion in profit to 21 billion in profit, and from 6.5 billion shares down to 4 billion shares in the next 20 years, where would you have told me the stock price would have gone?
Way up, right, Paul?
Way up. And look at it now. So why is that? Overvaluation. When you overpay for a good thing, you're still overpaying.
Paul, I'd love to go back and, I don't mean to cut you off. I was just thinking, I'd love to go back to their conference calls from these days and let them tell us what their huge plans were and where their stock was going to go. Well, do they talk about stock price in these, Paul? What do you think? I can't remember.
No, I get apprehensive whenever an executive team focuses on stock price. That's not their job. This job of the job, it's always funny to me, and this is probably a video we need to do separately. The goal of a management team is to not worry about the stock price. Their job is to build revenue, profit, and a good fundamentally based business financially. The stock will go where it's supposed to go over long periods of time. But in the US, we're so focused on quarter results and everything that now all of a sudden we reward CEOs because the stock price goes up. We shouldn't reward CEOs when stock prices go up. Just like we shouldn't fire a CEO because the stock price goes down. CEOs and management teams should be commended for revenue and profit and better balance sheets. That's what they should be rewarded for, not for a stock price. That's just the market's interpretation of all these things that are happening. And during booming times like now, those interpretations tend to be very, very wrong. And when things are bad, those interpretations tend to be very, very wrong. So that's like in our company, like at Crossroads, I tell everybody, your job is revenue growth. My job is to worry about the bottom line. If there's ever an issue where you're spending too much, where the bottom line isn't going to happen, I'll let you know. But our job is to keep a good balance sheet, which my brother and I handle. And then from there, have our partners and management team drive revenue. That's it.
Yeah, so, Paul, you really opened my eyes when you started talking about companies and owning stocks as if I'm owning a company. And all this changed when I started owning my own businesses. So if you're out there and you're not a business owner, I guess it's a language, Paul, you have to learn about, the ownership of business and how you want it to grow. So if you're new to the channel, we go through an 8-pillar process to screen for stocks and analyze them. We'll get into pillar number 1. Go ahead, Paul. Show us your screen here.
All right, guys. Pillar number 1 and our Everything Money exclusive software here that you can get, and I'll explain it later. We want, first off, it's a $200 billion company, but pillar number 1 is we want the 5-year PE under 22.5. It's 11. That's a check mark. Pillar number 2, we want the 5-year return on invested capital being greater than 9%. It's 12%. Check mark. Now, this dividend yield of 2.7% is pretty solid, over double the current market. And remember, guys, dividends are not always safe. You have to compare the dividends paid to free cash flow. I don't even look at the earnings. I don't even look at net income. I look at free cash flow. They paid out 5.58 billion in dividends, and 2 lines above in our exclusive software, it shows you the 5-year average free cash flow of 15.7 and last year's free cash flow of 17.3. So easily able to cover it. Now, I will say this, Seth. We're talking about it in round one of this video about dividends. People love getting dividends. Dividends are very tax inefficient. Dividends are paid out after tax. This 15.7 billion is after the company already paid its corporate tax. Then it pays it out to you in a dividend, and you got to pay 20 to 40%, depending what state you're in, 25 to 40% extra on top of that. So when people say, oh, the dividend tax is so low, no, it's not. It's already doubly, it's the second tax on that money. What I'd rather see them do is, this company is selling so cheap. Do me a favor, buy back shares. There's no tax on buying back shares, but you're giving me more ownership of the company and you're increasing my earnings per share and my revenue per share and my balance sheet per share, my assets per share and everything like that. So give that to me that way. Don't pay me a dividend. Give me more of the company.
Paul, do you think for a vastly probably uneducated or in terms of stocks, an uneducated investing population, it just sounds better to issue a dividend than buying back shares, right? It's kind of hidden in the balance sheet. What do you think?
Yep. Yes, but with our channel, we're trying to appeal to the small subset of people who want to understand investing and understand businesses, and not just hope for the hype train to take over, and then they make a lot of money because their stock price goes up. So that's the difference with our channel. We're not trying to be this channel where it's like, oh, this thing's going to go to the moon. No, we're trying to sit there and say, listen, the smart financial decision is buy back shares with a company this cheap, with this much cash flow. So
pillar number 3.
We're going to go to the income statement of our exclusive software. We want to see revenue growth of the last 5 years. 62 billion, 78.5 billion. Pillar number 4, we want net income increasing. Scroll down a little bit. 13.85 to 21.1. Pillar number 5, we want shares outstanding decreasing. This is what I mean by buying back shares. We want to own more of the company over time. We don't
as
want
you
them
said, Paul, as you said, they've been buying back shares for 20 years now.
Yep. In 1999, they had 6.8 billion shares. Now they have 4 billion. And 5 years ago, they had 4.69 billion. So check mark there. Pillar number 6, we're going to look at the debt. Because just like you personally, a company with more debt is more likely to struggle during recessions and bad times. So what do? We go back to the main page of our Everything Money exclusive software. We look at the 5-year average free cash flow, 15.7. We multiply this by 5. That's $78.5 billion. We want their total long-term liabilities under $78.5 billion. So I scroll to the top. I go to the balance sheet on our exclusive software, scroll all the way to the bottom. Total long-term liabilities, 48.3. Check mark there.
Nice.
So they can basically pay off all their long-term liabilities with the last 3 years of their free cash flow. Now, speaking of cash flow, let's go to the cash flow statement and do our last 2 pillars, which are driven by cash flow. The first one is we want to see free cash flow growth of the last 5 years. Free cash flow is cash from operations less your capital expenditures. And the 5 things you can do with them are pay dividends, buy back shares, pay down debt, make acquisitions, and invest back in yourself.
Boom.
So we added this line to the free cash flow statement. This doesn't exist in any other free cash flow statement. We want the math to be easy for you. 5 years ago, they did 11.8 billion in free cash flow. Last year, 17.3. Check mark there. And then our final metric, we want to come up with a market cap to look at for the company. This isn't set in stone. It's a starting point. We take the 5-year average free cash flow, multiply it by 20. 15.7 times 20 is $314 billion. The current market cap is 204. That's a check mark. That means the company is currently selling for less than we're willing to pay for it. Let's go look at the 8 pillars tab to see how exciting this is. All 8 check marks, guys. This is an 8-pillar thriller, as Seth would say, right, Seth?
Yes, of course. I love this.
So does this mean it's a buy? I don't know. What we need to do next is go to the stock analyzer tool, which has been the most popular part of our exclusive software. What we're doing here is every investment's the present value of all future cash flow. And since we don't know the future, we have to make assumptions about that. And this tool will tell us, based on our assumptions, what we need to pay for the company today. So we're going to do a 10-year analysis because Intel is a big company. It's going to be around for a long time. Uncle Mo, give me some revenue. Give me some revenue growth numbers.
2, 3, and 4.
Okay. Give me some profit margin.
22, 22 and a half, 23.
Free cash flow margin.
Would you say the same for free cash flow or a little bit lower?
That's a good question because the profit margin's been higher than the free cash flow.
Hmm.
So I'd probably go lower on the free cash flow margin.
Okay. Maybe 19 and a half, 20.
Okay. PE.
12, 14, 16.
And then return, I always do 12.5%, guys, because you can get 9 or 10% just by investing in ETF. So for margin of safety, as well as give yourself a reason to have an individual stock, look for a higher return. We hit the analyze button. Boom. Pretty consistent. We've done different videos of this and put in different numbers at all times, but it always ends up somewhere in this high 40s, low 50s range for our mid assumptions.
Yep.
Right. So our goal is to buy, and I look at Intel saying this is a leading tech business. And some people would argue like, oh no, it's dying. Okay, then it's dying. But the company is dying with increased revenues and they have great chips coming out. There's a chip shortage going. I think very positively about the future of this business because of how cheap it is versus a company like AMD, which we'll be doing next. So I look at this and say, this is awesome. And guys, this is why we created the software. We created all this software because our users wanted to be able to analyze companies without having to wait for us to make a video. This software allows them to do that. The things you get with this software, you get everything on this main page, the 8-pillar, all these tools right here, plus all the stuff coming. You get exclusive daily content. That's 1 to 3 videos a day that made by us just for our users. You get access to Seth Mo and I. You get 30 years of financial data, over 30 years of financial data. But most importantly, you get access to our community. So our community is over 6,000 people who've already bought this software. It's in a very organized chat. You can go in there and talk about everything imaginable, even crypto, even Tesla, all your value investing ideas, even personalized. We have people in there that are friends now. It's an incredible community. Join. All this is available for only $1 per day. There are 2 ways to sign up, everythingmoney.com or Patreon. The benefit of signing up directly with everythingmoney.com is we are not big enough to charge sales tax yet, so you're going to save on that sales tax for a while. And the other good news about the software is if you sign up today, every month the price to new subscribers goes up. So whenever you get your price, that is your price locked in forever. So this month it's $1 a day. Next month it's going to be higher. Last month it was lower. So when you sign up, we have people who are paying like 25 cents a day right now because they signed up so early. So sign up now, $1 per day, less than a cup of coffee, gets you access to all of this. If you can change your returns by 1 or 2% to the positive or decrease your losses by 1 or 2%, this will yield hundreds of thousands, if not millions of dollars, $1 per day. Sign up now.
If you want to trade Intel at a quicker pace, you can join Mo in that wonderful Bidnast Nation, our top trading tier. He will guide you and provide you with the rules you need to trade. Mo, come on in and show me what you got with Intel, baby.
So guys, with Intel, this is one of those stocks where let's zoom out a little bit and just show you guys. This thing gaps all over the place. If we're looking at the left side of the screen, gap here, gap here. Every earnings it gaps around. So recently, we just had a big drop on earnings, and this is when Mobileye was acquired, or they were going to split, or whatever the news was, and this thing shot up. It was up like 10% in a day or something. And I said, guys, with flagpole patterns like this, where you have, let me pull up a line chart for you and show you. Oops. When you have a stock that just skyrockets up, creates this flagpole, what I call it, it comes right back down. So I did say when this thing flies up like this, and I want you guys to take note of this because it happens all the time. It happened over here. No W's were created. What we want instead of these flagpoles are the stock price to go up and pull back a little bit and go up and pull back. And these pullbacks that are created, these are your support levels. So when the stock price pulls back, it bounces off that support level and goes to the next area instead of just shooting up and coming right back down because there's no support built in. So number one rule to take away from Intel right now is when you get flagpole patterns like this, which happen frequently, please take profits on them. And that's exactly what we did. Right now, looking at the stochastic, you're in a sideways trend. Nothing is really happening. It's in its consolidation channel with the exception of that blip last week or 2 weeks ago. And that's where we are. If you want to do something with Intel, I would say bring it over here on a daily chart. This is a day-to-day chart with a daily stochastic. You're kind of moving into the sweet spot here. When your yellow line gets into the sweet spot, see if you can make a run to the 100-day moving average, take profits, and it'll probably fall back down. Another interesting way that you could trade Intel is come over here on a 15-minute chart. Each one of these candles is a 15-minute period. We are opening up the previous day. So what we're doing is, as soon as you're over this 80% area, this is your percent K, you can add with good volume coming in, engulfing candlesticks coming on, and make that move to the top, and you can make a good amount of money in a very little bit of time. So if you're interested in learning these rules about long-term trading, swing trading, day trading, flagpole patterns, come and join me in the Bid and Ask Nation. You'll get my Trading 101 series, which is all of the rules that you need to be successful. The Employed Trader series, which is 6 stocks that I go through on a daily basis and update you. My Saturday monthly seminars, one Saturday per month. I spend the time with you guys answering Q&A, teaching, anything like that. It's for the Bid and Ask only, and a Discord community of 950 plus people that all want to trade just like you. It's a great community to learn from. Come and join us.
Can I ask a question?
Go ahead, Paul.
I wake up every morning with the tent pole pattern. What's that all about?
Does it come down?
You need to consult your physician, Paul. You need to consult.
It all works.
After I climb the tent pole, it comes down.
Paul, you have not mentioned often the Mobileye acquisition for Intel. I mean, what do you think? I mean, the more I look into this, they're going to take Mobileye public next year. They're growing. They're expecting tons of revenue. I mean, how will this affect Intel?
It's very small revenue right now, but Mobileye is the leader in car autonomous driving technology, I guess. So, I mean, it's awesome. I mean, that's great. But me, guys, I'm more of a, let's see how the past and present looks. And as long as I believe it's cheap enough where the future, like I believe Intel is going to be around for 10 years. And even if they're not the leader in 10 years, the pie is going to be so much bigger as the world gets more and more developed and becomes more reliant on technology, that I'm okay with that. But I'm like, okay, it's okay. It's just, I look at Intel like the US. We're not going to be the fastest growing country ever again, but we're still the US. And as the pie gets bigger and bigger, our share of that pie will decrease, but our piece of the pie will still be growing. That's the way I look at Intel.
That's a take, folks. Follow the thumbs up. Join the community. You will love the software, and we'll see you next video.